Good morning, everyone. Welcome to the Macro Snapshot. We are Tuesday, September the 9th, 2025, recording this in the morning. Okay, so let's just quickly check what's going on. Not a huge amount of data. We did just get the NFIB small business survey. Let's have a look at that. That looks to be fairly sort of stable here. Nothing too dramatic. Survey was for 100, came in at 100.8. So, a little bit up over sort of last time. So not horrible. What's probably going to get more market attention, or at least interest, at least from a political point of view today, is the preliminary benchmark payrolls revision. So that's going to be released from the Bureau of Labor Statistics, the BLS. We all know that Trump fired the head of the BLS. There's been a lot of talk about the confusion there, the lack of trust in the data, and in fact, there's some rumors yesterday that the White House has prepared a report about the BLS and their sort of a statistical methodology, which could be released, quite critical. So the point is today that this is in what's expected, as you can see, is about minus 700,000. We had Waller, who's one of the candidates to head up the Fed. He was basically out with a speech a few days ago, essentially saying that, on a monthly basis, he thought around about 60,000 jobs could be lost or revised downwards. So that would give us this number of about negative 720,000 jobs. So I would say that anything sort of above that or below that, rather, sort of a greater revision, so minus 800,000, minus a million, something like that, could be a little bit of a surprise for the market. But keep in mind that we had this last year, and we did get a downward revision last year of over 1 million jobs. Now, it wasn't massively market moving. You could argue that it wasn't. On the other hand, at this period, September, that's when the Fed did do their jumbo cut of 50 basis points. So apart from a sort of a daily sort of trading sort of impetus, it's going to be interesting today to see these numbers. There's going to be probably quite a lot of political sort of fallout. No doubt Trump will be tweeting and saying it's all sort of politically rigged if the numbers are negative. On the other hand, if the numbers come in, less sort of revised than expected, I don't know, minus 100, minus 200, minus 300,000, there could be allegations that this is sort of a politically manipulated number, not reflecting the real situations. Point being, though, that if it does come out very negative, I think we have to look at it as a sentiment sort of momentum sort of indicator. So let's say, for example, it does come out at minus 700, minus 800, minus 900,000. That would give a little bit more sort of confirmation, even like a symbolic way, even if you don't love the numbers, that the labor market is in some sort of structural sense weak or weakening, which, would argue for a Fed cut, maybe even a jumbo cut of 50 basis points. So that's going to be kind of interesting to look at that number. Apart from that, we don't have anything else today in terms of data. We do have the PPI numbers tomorrow. What we do have, though, a couple of other events. We do have the 3-year auction, so we're starting the auction cycle. Again, it's going to be interesting. That should be quite strongly supported if you're of the belief that the Fed is going to start at sort of a cutting cycle. No reason why the 3-year auction today should perform badly. The other thing which could get the market's attention today, there's a big Apple event at which they're expected to unveil some new iPhone models and maybe some upgrades to maybe the iPads and MacBook Pros, things like that. Anyway, so interesting from a sort of a product situation. And obviously that could affect Apple share prices and the broader NASDAQ. But just in terms of the other stuff, let's just have a look and see what's is going on with the Fed here. As you can see, we're already priced up pretty dovish now, 28 basis points, so well above the 25 basis points for the September meeting, which is not that far away on the 17th, so only just over a week away next Wednesday. So that's over one cut fully priced. Really what the market's trying to figure out is there a possibility of a 50 basis point cut coming our way in September? And to be honest, if the job numbers today, come in very, let's say, more than 1 million revisions downwards, that would be quite a negative, at least from a sentiment, a political point of view. And no doubt Trump would be railing that the Fed needs too late and they need to be cutting. And we could see this 28 basis points go at least, let's say, to a half possibility, a 50% possibility of a 50 basis point cut. So that could go up to, what's that, 37.5. So 25 plus another 12.5 basis points would be 37.5. So there is a possibility there that to move. But again, the market will probably want more information from the PPI and the CPI coming out a little bit later in the week. But just in terms of, it's interesting just to see, how the market has changed its viewpoint, because this is the SOFR curve, so the short-term interest rate curve. And as you can see here, the terminal rate at this point is It's about 2.85. So 2.85. So it's definitely been repriced. And if we go back, let's say a week, so let's just bring this up from a week ago, and I'll just zoom in to make it a little clearer here. You can see that there has been a dovish repricing. So this is where we were with the orange line 1 week ago. And you can see that almost all across the SOFR curve, including the terminal rate here, the terminal rate has dropped. It was at about 3%, and it's now actually dropped down, as we just saw, down to about 2.85%. So the point is here that the market definitely has repriced all across the curve, and it's looking, for sort of the rates to kind of trough out to reach some sort of low point, around about the beginning of 2027. So essentially looking for a cutting cycle over the next, what would that be, about 15 months or so, something about sort of 5 to 6 cuts. That's where we're at the moment. So this is interesting just to keep that in mind. That's why we've got this up, the WIRP chart. Interesting just to start keeping an eye on what's happening in Canada, because, we had that pretty shocking, well, I don't want to say shocking, but let's just say very weak labor report. And just for the Bank of Canada, which is also meeting the same day as the Fed next week, but in the morning, 10:30, you can see here that, the chance of that rate cut have actually sort of gone out a little bit. So let's just have a look at that, bring that up. I'm going to bring up intraday price graph. So just give me a second. So this is the pricing for the for the September meeting for the Bank of Canada. And as you can see, there's 19 basis points of cuts priced in. So not yet a full cut, but let's just scroll back and just see, how and if that has sort of changed. And you can see here that it's a bit choppier than, let's say, the Fed number here. But you can see that if we go back, 1, 2, 3, like 6 or 7, 8 days here, you can see that that was only 8 basis points, something like that, and it's been repriced dovishly by about 10 basis points. So you can see what's been happening as the market is digesting more and more of this weak data from Canada. You can see here how the probability of a cut has risen, and we're now at about 80% or 19 basis points. So that's something interesting to look at. The other thing, of course, which is also quite interesting, is just to see what's going on in Europe. We have the European Central Bank this week, actually, in a couple of days. So it's time to start looking at that. And if we look at that here, 11th of the 9th, as you can see, 0% chance of a cut priced in. So the market absolutely convinced that the ECB will do nothing. So at that point, if with that situation, it's really going to be about forward guidance, what Lagarde has to say. I'll say more about that probably tomorrow and on Thursday morning. But as you can see, compared to the Fed here, no more cuts priced in, even going into the summer of next year of 2026, only a 70% chance of a cut by next summer, so only 17 basis points. So that does look to me a little bit on the dovish side. Essentially, the market is saying, the ECB is done. It has an overnight rate of around about 2%, and for sure, it has definitely cut a lot more than the Fed. But that's going to be much more of a growth story, maybe not so much of an inflation story. So definitely going to be interesting to see what Lagarde has to say about growth this Thursday, and if she does signal some downside risks to growth in the European Union. I do think that this whole curve here does seem to be a little bit underpriced. Not even one more cut fully priced in the next, basically 12 months or so. So that's an interesting one. Other thing which is also want to keep an eye out for, we had there was an interview released by the Martin Schlegel, the head of the Swiss National Bank. Let me just bring it up here, and that was quite interesting, just in terms of you who trade the Swiss franc, because he made two comments, and we're just looking here to see where we're at here at the moment. You can see basically at around about zero at the moment for the Swiss, so not in negative, but getting towards sort of negative in theory, possibly. But he did say, and here are the two quotes, he said, there was a high hurdle to reintroducing negative interest rates. So, and he said that, and the second thing he said was that the real appreciation, and he's talking here about the Swiss franc. So the fact that the Swiss franc has appreciated in real terms, so inflation adjusted terms, he said it's not as strong as it may seem, because the input costs in other countries globally have been increasing as well. So the point is here that just to take away from that is that they're in no hurry to go into negative interest rates, and also they're expressing a certain degree of comfort with the relative strength recently of the Swiss franc. So there was sort of some concern that, with the tariffs, there's like 39% tariffs imposed by Trump on Switzerland, and with the strong sort of safe haven of the Swiss franc, that they may be tempted, they being the Swiss National Bank, they may be tempted to sort of come in and kind of suppress the value of the Swiss franc, especially from a real exchange value point of view. But that doesn't seem to be the case. Martin Schlegel, as I say, the governor there, essentially saying, it's not too bad, and we're certainly in no hurry to get into negative interest rates. So the market is pricing, potentially slightly negative interest rate, not a full cut over the next sort of year or so. So that's definitely one which is going to be interesting to look at. And let's just have a quick look at that chart, just to have a look, because what's interesting in terms of the Swiss franc is maybe not even so much against the US dollar. We can see against the US dollar, which has been pretty weak over the last period. You can see that against the US dollar, the Swiss franc continues to strengthen. And also, if we look at, let's say, the euro versus the Swiss franc, we can see that that's been pushed down as well. So the Swiss franc definitely looking quite strong here. And it looks as though the Swiss National Bank doesn't have any short-term plans anyway to intervene. Talking about some other currencies, let's just have a quick look at the yen. Yen, you can see here actually strengthening. So this is the US dollar weakening against the yen, or the yen strengthening. It's going to be pretty important here. You see it's now broken down below the moving averages here. So we've got the 20s, 50s, 100, 200. It's broken decisively down. It looks as though this sort of uptrend, this sort of little range here, we're getting now just towards the bottom of this range. And this as well, this most recent impulse on a Fibonacci here, you can see that this level here, which coincides to the 24th of July price of about 145.9, that's pretty key, because that would be the 61.8 fib retracement. So it looks as though the US dollar is weakening against the Japanese yen. And what we saw overnight, we did get some, there was a Bloomberg story from, the usual sources from the Bank of Japan, essentially saying that the Bank of Japan may actually hike this year, probably not in September, but maybe in October or December, regardless of the domestic political instability. So one of the narratives in the market has been that, as we all know, the Japanese Prime Minister resigned over the weekend. There's going to be, I think, on October the 4th, an election to elect a new leader of the Liberal Democratic Party. And that's creating a little bit of uncertainty. And there's a bit of a fear that, maybe there's going to be a more profligate looser fiscal policy from sort of, opposition parties, other factions within the LDP. But basically, this sort of a source story, this rumor story from the BOJ high officials saying that, hey, despite the political uncertainty, the Bank of Japan may actually decide to hike, because inflation is remaining persistent and a little bit sticky there. And that's given a bit of a boost to the yen, not only against the US dollar. Let's have a look against the euro. You can also see the euro falling quite strongly against the yen. And if we just take a quick peek at the interest rates here. Let's have a look and see for Japan what's expected. You could see here for the upcoming meeting on the 19th, basically 0% chance of a cut. But where it gets interesting is in the December meeting, the October meeting, we have a 35% chance of a cut, so about 8 basis points. But then when we go out to Christmas, or just before Christmas on the 19th of December meeting, 2/3, so 66%. So it's 1/3 possibility in December, and a 66% chance of a December, October, I meant to say, and then December, 16 basis points. So the point is that could change. And if there's any more sort of source stories, or we continue to get, let's say, a more dovish Fed, a Fed which is cutting, and persistent and sticky inflation in Japan, and let's say the political situation stabilizes, definitely there could be some more upside strength for the Japanese yen. So that's something to be looking out for, absolutely there. Just talking about the yen, though, as well, the question is, how much can it appreciate? And of course, if there's going to be differentials and hiking, but just keep in mind, I just want to draw your attention to, I was just looking this morning at the real yields. This is for the 10-year real yield in Japan. So adjusted for inflation, keep in mind that on the 10-year yield, it's actually still negative 150 basis points. So the point is that, that's still quite a long way from where, let's say, for example, the US real yield is, which is obviously in sort of positive territory at this point. And just keep in mind that the Japanese real yields are still, the nominal yields are very, very low, and inflation, is ticking up to that 2.5, 3% level. So that's causing negative real yields. And in terms of the currency, the yen, you have to not think that the yen with real yield, negative real yields can necessarily accelerate or rise without any sort of question marks is the point. Okay, guys, just finally, just want to have a quick look at a couple of other markets. Equities, volatility is low. We see the VIX here trading at a 15 kind of handle here, down at 15.2. So VIX is pretty low here. And we see on the ES just sort of grinding up, not particularly going higher, lower. Maybe Apple today will give a bit of a point here. And really what we're trying to figure out is with the CPI and the Fed, is the Fed once we get more data, is the Fed, sort of ahead of the curve, behind the curve? Is the Fed actually going to be cutting into a decelerating economy, a weakening labor market? In which case that could be a negative for equities, as growth starts to fall off. On the other hand, if the economy is doing okay, the labor market is not too bad. We could get a Fed which is cutting into a stable, even relatively strong economy, albeit with a little bit of inflation, and that could actually be a bit of a tailwind for equities. So we probably need a little bit more information, and of course we'll get a little bit more with the PPI and the CPI tomorrow. But basically at this point, equities just sort of hanging in there. I just want to also just have a quick look at the French bond situation. Yesterday we saw that the Prime Minister was voted down. And again, this is the OATs in France, so we don't yet know whether Macron will call an election, try and form a technocratic government, or just another centrist. But at the moment, that was pretty much priced in. And you can see here that the reaction, in the last 24 hours from the French bonds, if anything, has been a little bit positive. But where we have seen a little bit of reaction, you see here in the spread between the French and the German, you can see that the spread popped up, as I thought it might do, into about 82 basis points, but overnight at the open, but it's subsequently given back a little bit. And maybe that sort of pushing out of the spread, that was just because the vote was actually like worse than expected against Bayrou, in the sense that obviously the left wing and the right wing parties voted against him, but also the centrist bloc. Actually, there were a lot more sort of votes against him from the centrist bloc than had been expected. So absolutely no support for that government, and that's putting a little bit of upward pressure on the French bonds, or at least the spread over the German counterpart. But to be honest, I think the market, that's quite priced in at the moment. What we'll need to see is, I think, some further activity, maybe the calling of general elections, more developments. As I think I mentioned yesterday, we do have a Fitch rating update this Friday after the market on the French bonds, which quite possibly will be a downgrade. But again, that's not completely unexpected. So I don't know how market moving that'll be. Just finally, just want to have a quick look at oil. We know that OPEC Plus, they did raise the output by about 137,000 barrels over the weekend. Not a huge drama here. As you can see, oil just sort of hanging about. It's basically trading in a range here. It's still trading a little bit on the heavy side. If there's any sort of negativity in terms of output to global growth, there's no reason why oil can't drift down a little bit. But on the other hand, the global economy seems to be okay. It's really going to depend what happens in the US, and if we get a bit more of a scare out of, sort of Europe and China. So oil at the moment, pretty much range bound. It may be worth noting that the Saudis, for their OSP, so there's the selling price into Asia, which was released yesterday, was actually sort of discounted. So the Saudis, are willing to accept sort of lower prices. So maybe that's going to put a little bit of downward pressure on oil over the trading session today. We shall see. Okay, I'll leave it there, guys. Have a great day. Interesting, at 10 o'clock, we do get the revisions to the payroll numbers for the last year. Again, is that old news fully priced in? I think it's going to be interesting, just from a sort of a sentiment, momentum positioning point of view. And obviously the political fallout, no doubt Trump will be having his 2 cents, shall we say. Okay, have a great day, and we'll keep this going tomorrow. Thank you.